Be Wealthy and Smart, episode 954.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to look at the stock market and see what's going on, because it's gone up a lot over the last few weeks, ever since we had that scary pullback where everybody else was predicting a major crash, especially in the Chinese market. We've been going up like crazy. In fact, in the last month, the NASDAQ is up almost 10% and the S&P 500 is up over 7%. So things have really gone up quickly since that scary pullback. And here's what I see when I'm looking at the chart of the S&P 500. I'm seeing that there is a gap that was left near the bottom of that correction, which means that at some point we probably will go back and fill it in. And right now, it looks like the market is overbought. So what that's telling me is we could continue higher for a little bit longer and then probably see a 10% pullback. Nothing serious to worry about. It probably will feel scary again, like our last correction did in October. But overall, the market looks healthy, and a pullback is always something that is good for the market, especially when you've had so many up days in a row with very few down days. The S&P 500 just looks a little bit overextended here, so I think it would be healthy to have that pullback. And that always gives us a good buying opportunity. Same thing when I look at the NASDAQ. It's almost the identical picture of the S&P 500, where the NASDAQ has gone up quickly, has really escalated, has had a lot of positive days in a row, and is looking overbought here. To me, a pullback would be healthy. We need to get a little bit more fear back in the market, and it looks like about a 10% pullback would definitely do that. When we look at the fear and greed index, the market is at extreme greed right now. And you can find this by going to money.cnn.com/data/fear-and-greed. I'll put a link to it in the show notes. But this is saying we are at extreme greed levels, which doesn't surprise me at all because, as I said, the market is looking somewhat overbought here. We've gone up sharply over the last few weeks. There was a lot of fear in the market. Now we've swung to the other way where we're seeing extreme greed. That means it's time for a pullback. In addition to the S&P 500 and NASDAQ being up so strong, we have seen some sectors also be up very strong. Some of my favorites include electric vehicles and batteries. But one area of weakness that I've been giving you updates on is silver. And when I look at the chart on silver right now, it looks like the bottom is in for silver. We have a higher low, and it looks like silver wants to move higher. Longer term, silver's been moving in a channel. And while it hasn't broken out of that channel yet, which would be the confirmation we would like to see, it is moving up in a higher direction and, like I said, made a higher low, which is a positive. We also see silver forming more of a cup and handle formation, which is also a very bullish looking formation. So just like I've been saying, a target of $38 at the end of the year for silver, I still think that's a good number that we could reach, which is a 50% move from here. So it looks to me like silver is a great buy here and like it wants to go higher. Once we reach that $38 target into next year, silver is going to get much, much stronger, I think. So this is a great time to stock up on some silver. You can still get it very inexpensively. Not financial advice, but just saying this is looking like a super duper bargain here. The other thing I'm seeing is that small caps have really been on a tear for the last month. They're up over 8% for small cap growth, and that's because some of the larger companies had really gotten ahead of themselves and the small caps had been lagging. But now that the economy is recovering, interest rates have stayed low, those smaller companies are starting to catch up. One area that has lagged a little bit this year is the cannabis area, but there is rumored acquisitions going on because those stocks have gotten so cheap. I think what's going on with cannabis is that people were expecting legislation to go through sooner. And since we didn't get that legalization of cannabis across the United States, people moved their money out of the cannabis stocks into other things that were moving faster. And that took some of the air out of the cannabis balloon. It doesn't mean that these aren't great growth stocks. They really are. But I think they just got delayed a little bit because we didn't see the legalization happen. But now, some of those companies have gotten so cheap that big companies like Altria, the big cigarette company, is looking to buy cannabis stocks. And there's a rumored takeover of Cronos in the works. Altria had already invested $1.8 billion in Cronos Group in 2018. But now, after acquiring a 45% stake, it looks like they may want to buy the whole thing. It did have a warrant to buy more in the next 4 years after it invested the $1.8 billion, which took it to the 45% ownership. And if they exercise the warrants, it could take them to 55%. So it's not surprising that we're hearing rumors about Altria buying more or even maybe all of Cronos. At these levels, that would be a very smart decision to make. Remember, the cannabis industry is growing at about 40% compounded annually. So just because the prices have pulled back temporarily doesn't mean that the whole industry isn't still on a very fast pace for growth. It certainly is. Sometimes money just moves around because people are impatient and they go to where the quick profits are rather than hanging on when things might be taking longer for something to happen, especially in the legislative process. So cannabis stocks look like a heck of a buy here, another great buying opportunity that I think will look really smart next year. And one of the top performing areas this year has been real estate investment trusts. Oftentimes that confuses people because they feel like commercial real estate in particular is weakening with so many offices not being built out or with office space going vacant and also with businesses deciding not to expand. It seems like commercial real estate should be declining. I think that definitely will happen in the future, but right now we're seeing that other parts of commercial real estate are performing strongly. Things like apartments, nursing homes, storage areas. So even if perhaps malls and some commercial office space is weaker, other areas of commercial real estate are doing well. And real estate investment trusts can also be very diversified. So seeing the Vanguard Real Estate Investment Trust up almost 30% this year is one of the best performers in the market this year. Overall, the market looks healthy, ready for a bit of a pullback to get some of that fear back in the market. Remember, bull markets like to climb a wall of worry. That means people need to be a little uncomfortable in order for the market to go up. When people get too comfortable like they are right now at the extreme greed level, that usually tells you we're ready for another pullback. However, I will say things are looking really great, especially in the technology sector from now through the end of the year. So when we get that pullback, it's just providing a nice buying opportunity for you that if you have some extra cash to take advantage of, might be a good idea. Again, not financial advice, check with your financial advisor, but everything I'm seeing looks like all systems go for strong technology from this correction that we'll have into the end of the year and beyond. The market still seems very healthy to me, and although there are pockets of fear out there where people are still talking about a crash and this and that, I'm not seeing a total crash. Yes, to a pullback where we're getting back to basic levels of climbing that wall of worry, but no to an absolute crash. I just am not seeing that in my research, and the charts don't look like that's what they're setting up for. 10% correction, yes. Then a rebound, moving on to higher highs. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available so you never miss one of them. And I'm close to being able to announce the publication date for my next book. So stay tuned for future details on when that's coming out, what it's about, and I'm also going to give you some excerpts from the book, so stay tuned for some exciting announcements. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.